All right, what up, guys? We'll be back testing. Here we go. 9:42 Eastern, 7:42 Mountain Time. My time, October 17th, 2025. Hey, future me, if you're watching this, probably not, but remember these days. We will get to where we want to be. It's a fact. All of us here, anyone who's watching this video, we will get to where we want to be. It is a fact. I know it because I'm not freaking giving up, bro. That's all I know. Let's go ahead and review the market for today. So, yeah, very interesting day. Look at this. What? Very bipolar type of price action. Um, yeah, honestly, I was not watching in the afternoon, but what happened, bro? What is this? Anyway, let's take a look at kind of what we had going on. So as I said a long time ago earlier, we had this 4 hour gap that had been used 1, 2, 3, 4, 5 times, right? And so I was looking at how we might end up reacting off of this, right? 4 hour gap got used 5 times. So I call this supercharged gap. So S, Fiji. And I usually put a little lightning bolt emoji to show like, yo, we used this thing so much. So this is going to be really strong to frame and model off of. That's the point. For our supercharged gap, and then bang, dropping down to the 15-minute, right? I was saying, okay, we could probably get a buy model off of this, and what do you know? That was right. It's 100% right. We ended up starting out framing a buy model here. It is interesting though because we ended up getting this retracement first. Why did we get this retracement first? Well, this was a actually, this is very interesting. So normally market open manipulates, right? And we do get a little tiny Judas swing, but it's not very long lasting actually. And this is only about what, 10 minutes or less. So yeah, I guess it's about from market open to this low, it's 15 minutes or so. So it's always interesting. And the issue with this, guys, I would have loved to take in the 30-second inversion at the bottom to the upside. I just didn't see it. It was not something that, unless you were on the 30-second chart, you likely weren't going to see this inversion. Now, if you're on the 30-second chart and you see this close, it's like pretty freaking obvious, And the reason being, let's actually mark it out, right? We had SMT with the low. Like, genuinely, this was really nice. Had I had been on the charts at this exact time, man, this is one that you do not pass up. This is so clear and obvious. A plus, so it's not SMT with ES, it's SMT with YM. Once again, though, it's like, well, I had to really actually see that, and I didn't. Kind of annoying. But first, we'll frame it out, right? And this is crazy. Actually, we had the craziest part about this is the SMT was kind of stacked, because we also had SMT with this low. That's, oh my gosh, bro. That is so clean. You see what I'm saying? SMT with, actually SMT with this low. Yeah, right? This is a higher low. Wait. No way. This actually makes so much sense. Because here's 9 o'clock. Wait. No, am I stupid? This is not... It's a higher low on both. Wait a second. What about on ES? Hold up. Let's just look around for a bit. Yeah, this is a... See how this is a higher low on all? So, I guess I was wrong about that. But there was SMT with this low over here, I believe. So pretty nice how we had these stacked SMTs. So let's frame this out a little better. Wow, pretty nice here. We get our Judas swing, which occurs below 730. Pretty cool, right? Look at this. Let's get rid of this here. So I'm gonna mark out 730. So you can see how we end up sweeping 730 here. Then we also have 922. So we're below both of those true opens. We could get even more precise and say, okay, what's the true open of the 22-minute cycle? I guess 928. Anyway, we were below that as well. So you see that? So below 730. So this is the low of one 22-minute period. This is the low. Well, oh, I guess it's not actually 22-minute SMT. Still, we still have stacked SMTs. So you guys kind of see what's going on here, right? We had accumulation range, manipulation, starting to see it. And then 922 as well. Okay, accumulation, manipulation, and then 30-second change in state out of this. Not 30-second change in state, 30-second inversion. Imagine, were we delivering from a new day opening gap or anything like that? Nah. If we were, that would have been crazy. So yeah, you can kind of see why I liked this so much. So 730 got taken. And then you see the inversion for value gap, guys. It's using 2 candles as one here. Let me know if you guys see it. If you guys see it, type 1 in the chat. Using 2 candles as one. You guys see it? Beautiful trade here. Right? Accumulation, manipulation. And then 30-second inversion here. Using 2 candles as one. Dang, man. And what time was this at? 9:47. Is that a 369 time? 9 plus 4 plus 7. Nah. Okay. Let's drag this over. Okay, accumulation. Right, we end up getting SMT here. Manipulation. You guys starting to see this? True open at 7:30 got taken. True open at 9:22 got taken. Okay. And then the macro is from 9:50 to 10:10. So we were somewhat going into the macro, right? But the key is this had really amazing signature. That's the key. So, simple trade, just enter like this. We can project out this manipulation leg. You could honestly target the second standard deviation, and that's a pretty clean target. You could actually target the fourth, and you can see how that perfectly hit that high. That'd actually be 6-1. You guys see why the fourth standard deviation can be nice? Very obviously, this was the max extension, right? You see how perfectly that lined up with that fourth standard deviation? That's what I mean when I say the markets are this precise. It's not a coincidence. They just are. So I'm never giving up. So second standard deviation. Bang. So this is where I would target here. And doesn't backtesting just get you excited? Okay. So yeah, this is exactly how I would take this, right? Using 2 candles as one, 9:47. (30-second). And then as well, let's show how theoretically if you held this to the fourth, then you would have caught this exact top, right? Pretty sweet. But I'm not suggesting to do that because it's not always going to work, but here it did. Okay, so 947 inversion per value gap, 30-second, number 2. Hey, Javier, what up? Javier's here. How's it going, bro? Just chilling, locking in, reviewing the market. Very chill. I was about to say Saturday. No, it's a Friday night. As always, I'm kind of stuck in the Idaho hole. I got no friends here, so just being me, just back testing. I don't care, man. I don't care how long it takes. I know we are all gonna be successful because I know, at least I'm not. I'm not ever gonna give up. I'm not ever gonna give up. I know these markets are algorithmic. It's so obvious. So you can't beat me. You can't stop me. You can't. These markets. No one in the world can stop me because I'm never gonna give up, bro. These markets are algorithmic. I'm locked in until I do it. What up, Cave? All right, guys. Back to back testing. Very chill Friday night. I wish I could play music once again. Obviously I want to, but it's not something I should just risk. Like I think I'd get demonetized. It's too good, bro. It's too perfect. Like I was just marking this out for you guys on stream. Like if I project out this manipulation like 4 standard deviations, how could it be possible that this is the exact high? It's not. It's not possible for it to be the exact high if this was random. You wouldn't see this type of thing. It's impossible. If the markets were truly random, this would be impossible. There'd be no reason for it to stop exactly 4 projections of the manipulation. It's literally stupid to think it's random. It is literally stupid. Like you have to actually believe it to not be random more than you have to believe it to be precise. It's just so stupid. Like this is crazy. You see it? That's how you know that these markets respect smart money concepts because the market will perfectly react. It's like, okay, obviously, it's just a skill issue. We just got to keep locking in, you know? But you can see 4 projections up. It's like the market, these markets, these trading systems are built in. AMD is built into how the markets move. So it's like just trading AMD, I don't even know how to explain it. It's just like it's a built-in trading model into the market. It's literally perfect how we'll go 4 projections up for the manipulation. It's a built-in model. It's just kind of cool. All right, hold on. Taking a break. Sometimes I'm really good at explaining things. Other times, my brain just doesn't work, and that was just an example of that happening. So, all right, guys, let's move on here. Obviously, that inversion was kind of nice. You're very good, bro. Hope you follow your trades and never get tilted, win or loss. Yeah, I never tilt. If you ever see me do something dumb, it's just I did something dumb. It wasn't a tilt. Like for instance, today, I forgot that I have a rule where obviously if I can't risk what I'm supposed to risk on personal, then I can't take the trade on personal because I'm not risking what I'm supposed to. Right? That's just common sense. So I forgot about that rule. So I entered the trade and then I was like, oh, well, technically the stop loss is supposed to be here. So let me just change that. Bro, that was so stupid. I'm never doing that again, bro. That was so stupid. But it's stuff like that, right? It's not that I tilted. I never tilt anymore. I will never tilt again on my life, dude. I'm never going to tilt again. That's something that's in my control, right? I can control whether or not I tilt. I'm never going to tilt again. I've already made that decision 8-9 months ago. I don't know when the last time I tilted. It was a long time ago. But I'm never going to tilt again because that is the number one thing that will make sure that you will never become profitable, because if you tilt one time in your trading career, you can lose everything. So I'm never tilting again, because I understand that concept. If I tilt one time as a professional trader, you'll go from $10 million to zero, right? I understand that. I understand that. So I have to train my brain now, bro. So yeah, it's been, I don't know. I haven't gone on a tilt in a very long time. And I just understand that concept because I want to be successful. You went on tilt? No, Simon. I'm sorry, bro. Negative 4K worst point before eventually getting it back to negative 290. Man, yeah, man, that is one of the hardest hurdles. I'm being so serious. Like, you go watch my last stream of 2024. I went on the craziest tilt. And then even after I said that I stopped going on tilts, I was still secretly kind of going on tilts. um, and it's just part of being human, bro. It takes time training out of a bad habit, just like anything. So it's just part of being human, bro. But just understand that there's no way for you to be $1 million trader and ever go on a tilt, because the day you go on a tilt with $1 million, you just back to zero, right? So you have to understand that concept. Once you understand that concept, you'll realize, like, that is probably the number one most important thing, is to never go on tilt. It's the number one most important thing over your strategy, over literally just even taking a stupid trade. Who cares if you take a stupid trade? Just don't go on tilt, man. That's the number one thing in trading, is never tilt. But what I was gonna say is, man, what was I gonna say? I kind of lost my train of thought, but yeah, guys, trading's hard. But don't punish yourself more than you need to be punished by tilting, right? So, I don't know what the other thing I was gonna say. I kind of forgot. But let's keep backtesting. There was something else I was gonna say. I really don't remember. Okay. Anyway, guys, let's keep going. So yeah, like I said, beautiful 30-second inversion using two candles as one, by the way. So you might be wondering, what the heck, Jake? That's not an inversion. I see two fair value gaps, not one. And that's because I combined them, bro. And that's just something that you'll realize over screen time, is like, if you combine two candles into one, well, it's just a fair value gap on the higher time frame. So just something to do in specific instances where it contextually makes sense, like this, right? 30-second got inversed, and then bang, up to the accumulation range high, and then eventually to the max extension. And you can see I'm not making this up, right? 4 projections up, you can see that's the exact high. So that's the power of standard deviations and the max extension. The max extension is going to be a very, very sensitive area. So anyway, that was the first way to get in on this distribution. Then, like, I saw this displacement candle, and my next thought instantly was first presented for value gap. My brain instantly light bulbed over to the first presented for value gap. I'm like, okay, if we continue higher, we're probably gonna backtest it and then continue, right? It's the first presented for value gap is like a checkpoint for price at all times. The market's gonna refer back to it constantly. It's like a little check-in spot. You go to the check-in table to make sure, like, yo, you still in the race? Okay, good. You can keep going. So it's like a little checkpoint to get in. You can see how the market responded perfectly to it, right? My brain, I was already thinking that we were probably gonna do this. And then I got scared. Because, well, let's go down to the lower time frame that aligns with it. This is my first strike model, by the way, where you take a 5 or 15-second change in state out of the first presented for value gap. Now you can see 15-second. We get that. I was looking at the 5-second, And yes, this was a beautiful trade. This ended up going to the max extension. I was scared because it honestly did not. I wasn't sure it was gonna be. It was obvious enough. I wasn't sure it was obvious enough. Um, I was just thinking maybe we'd have to come down and sweep the low again. And I don't know if that was the right decision or the wrong decision, right? But clearly, um, I maybe should have just entered because if you macro out the change in state, right, you can see that it sometimes this is going to happen with first strike. And if I project this out, 1, 2, 3, 4, 5, 6, 7. Oh man, we only hit the 7th. Yeah, so sometimes, like I said, the 7th is going to be a lot more sensitive than the 8th sometimes. I thought we hit the 8th, though. Maybe I measured this out bad. Anyway, right? You guys get the point. We definitely had a trade off of this, is what I'm trying to get at. And I kind of just use all these projections as take profits. But yeah, I was kind of anticipating, yo, we might backtest the percent for value gap, use that as a checkpoint, and then continue via change in state. Man, I was thinking it and everything, and I just hesitated. It wasn't obvious enough. I don't know if that was a mistake or if that was the right idea, but this ended up playing out. So something to put in my journal and notes, like, yo, sometimes even when it's not super obvious, sometimes it's still going to play out. Just keep that in mind, right? If the bias is obvious, sometimes you don't really need deep manipulation because, well, it's expanding. The higher time frame's expanding. You get what I'm saying? So there might not be like another internal sweep. It might literally just be a little boom, 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 boom. You get what I'm saying? Bro, IFG requires what confluences to make it valid? Liquidity sweep, for sure. You have a max loss or max per day, and liquidity draw, I guess. Dude, is it possible to add customized trade entry options on TradingView accessing TradingView, like right-click menu, you know? So, okay, let's go through these all one at a time. IFG requires what confluences? Inversion for value gap, basically you just need, so here you can see this one, the one we were just looking at. Basically all you need is liquidity sweep, inversion for value gap, draw on liquidity. That's it. That's really it. The rest is going to come down to screen time and context. And that's the hard part, right? You can understand the strategy, which is a liquidity sweep, an inversion, and then a draw on liquidity. Maybe it was this high for you, right? The easy part is knowing the strategy. The hard part is getting the screen time to know the context of when it's likely to work and under what signature it's likely to work. But yeah, all you need is liquidity sweep, inversion, a target. That's it. Max drawdown is 7,500. Okay, wait. So, let's see. Do you have a max loss or max trades per day? Yeah, so basically, I take New York session very, very seriously. And for New York session, I take the same trade across all accounts that I have, whether that be personal, Top Step, Apex. I'm going to probably get Tradeify account as well. And I take the same trade, copy traded across every single one of these accounts. And I can take more than one trade, but my rule is one loss. After one loss max, I have to be done. But I get unlimited break-evens and wins. So this is how I make sure I never tilt, is I only allow myself one loss. So basically, don't mess up. You got one bullet. If you hit the shot, you get that bullet back. You have the freedom to go again. If I miss, well, then I just got to be done. Because I'm in this for the long run. This is just my own personal opinion. If I'm in this for the long run, literally like an investor, there should be no reason to have more than one loss in a day. So this is kind of how I see it. I can have unlimited break evens and wins, but once I hit that one loss, I'm done. And then I have a set risk per trade, and I convert it across all the accounts. That's what I do. Is it possible to add customized trade entry options on TradingView accessing Tradeovate? I have no idea. Honestly, I don't know. I don't even know what you're asking, to be honest. But that's something for ChatGPT. I would ask ChatGPT that, and it'll tell you. But yeah, anyway, let's keep going. Actually, I'm gonna take a break real quick. But yeah, this is what I do. Take the same trade across all accounts. One loss max per New York session. Kirk, what up? You're not first, bro. But we love you. We love you. All right, I'm gonna do a little break. But yeah, first minute for value gap. We gotta change the state out of it. Kind of was anticipating that, honestly. I was just worried that the change in the state wasn't obvious enough, when clearly it was. Clearly it was. So that's a note I'm gonna place on that trade. Is like, sometimes when you get really good expansion and you're just kind of using the first minute for value gap as a really quick little checkpoint, you might not get much of a sweep, right? This is something that I'm going to take note of right here. But you can see how much displacement we had before backtesting the first minute for value gap. It's like, let's get rid of this and this and this. We had so much displacement, you can see that meaning we don't need to dig very deep into the 1P FVG before possible CISD and continuation. Makes sense? So I was worried because I was like, I don't know if this is obvious enough, right? We barely swept liquidity. We barely got a change in state. I could honestly see this failing. And yeah, maybe it could have failed. But from an RR perspective, when you think about it from an RR perspective, look what I missed out on, right? I missed out on a 7R. And like I always say, I like to target the 7th, not the 8th. I don't know why. It's just something I noticed from screen time. And yeah. So once again, just a little subtle note from this trade, right? That because of the displacement, we actually might not really need to dig very deep into the first minute for value gap when we backtest it. And once again, you want to keep this gap drawn out throughout the day. It's going to be a checkpoint for price throughout the day. Let me charge my laptop. So, yeah, pretty clean, right? First minute for value gap. Tiny little sweep, little baby little sweep here. And then we run up to that 7th. Honestly, targeting the 4th would be completely fine here, right? Sometimes you don't need to be a millionaire in one trade, right? So I'd probably just target the 4th. And you can see that that was perfectly fine, right? 4th standard deviation, bang, got hit, Now, it kind of depends on the context. Like, if there was a really nice strong liquidity over here, then maybe I would target that. So, it kind of depends on the context. In this context, I like the fourth standard deviation. So, this is a 5-second CSD. From my back testing, you can align the first percent for value gap with really a 5 or a 15-second change in state. And both will be nice. And so I'd enter on the retest like this. Bang, slide that order in right under the change in state. Obviously, you have to be kind of quick with it, right? The market's not just going to hand it to you. You only got however many seconds to get this order in, but then bang, up to that fourth standard deviation. Pretty clean. And yeah, because of displacement, you don't need anything fancy. You just take that change in state retest. So yeah, 9:50. It's also right at the macro time too. So let's go ahead and save this. 9:50 first strike. That's the name of this model that that's what I call it. And then 1 minute aligned with the 5-second. That was at 9:50, right? Yeah. Bang. All right, definitely do that, bro. Sounds good. All right, let's keep going. So, you know, obviously we kept going higher, and then we get a retracement. Let's figure out why. Why did we get this retracement? Obviously, we hit that fourth standard deviation, but then what other reason? What other reason did we stop here? Because you'll know it was a pretty big deal. It was a pretty big deal that we got this retracement. Actually, the one I'm thinking of might have been later in the day, but it was like a, you know, someone stopped the party, bro. Like, we just all of a sudden got this crazy retracement. Actually, I'm thinking of one. Yeah, I'm thinking of one later in the day. But yeah, later in the day, I'm thinking of this one. But this retracement in the short term, why did we get that? Let's figure this out. I believe what happened was we had. Okay, yeah, this is the tiny one here. So this one, we just kind of had a gap. We took out these highs. We took out the low resistance highs. So all of these were low resistance. As I said, by the way, at the beginning of my live stream, I said, yo, these are going to be low resistance. I literally said that. You can go watch the live stream. I said that live on live stream. It's just, I have a skill issue because I can't get the entry sometimes, but whatever. Right? So all these were low resistant. We run up to them. So I would consider this kind of like an implied gap. Right? So from here, sometimes, guys, the way fair value gaps work, you literally just kind of like eyeball it. Like, okay, so we have an old low here, a high here. This is an imbalance in price. And you see how the market responded to that. It's something, according to my back testing, it's something you can do, right? That's the imbalance in price. And you can see how the market responded to that imbalance. And yeah, we ended up going a little lower off of that. Not anything crazy. You see how we respond to it like once and then twice. Another thing I want to look at is we might have had the first presented for value gap got used again. And I was thinking we would go. I was thinking we could maybe go. Let's get rid of this. Here, let me show you guys. So this is something I noticed. I did not get the entry. I noticed it a little too late, but it was part of why I took the loss that I took. I took the 3-minute inversion off of the first minute for value gap, and I want to see why that failed. I think it's going to be important to figure out why that failed. But let's see. I think the SMT was with, let's go to ES. Yeah, the SMT was with ES, and wait. Wait, what? Where's the SMT? Yo. Wait, where's the SMT? It must have been with YM. Am I stupid? It was literally the whole part of the whole point of the trade was that there was SMT. Oh, yes. Okay. So the SMT was with this. Okay. I think that's what it was. Yeah. Yeah, the SMT was with this slow, I believe. Okay, I see it now. Okay. So one thing I was thinking of is, did we get first strike out of this? 1, 2, how far did it go? And 3, why did it stop? So I want to do 50. I usually like doing the 15-second. I only do 5-second if there's not really a good one. And yeah, we had SMT here. We pop down into it. Displacement here. I would use the wick like that. And then project out like this. Oh my gosh, bro. Oh my gosh. You guys see this? Precision, bro. Precision. The precision in these markets is unbelievable. Unbelievable, man. And you guys really, people really think this is random. So what am I looking at? You guys might be wondering, right? Well, this is first strike, where I enter on the wick of the change in state instead of the body, because it's a pretty big wick, and I can just tell, like, yo, that's gonna be a better entry. I can just tell. So 15-second CSD. I'm gonna go like this. And so then we project out this manipulation leg and then 4 standard deviations up. Wow, we top ticket. Pretty cool, right? Count Chili. Backtesting in bed. It's a little different if I'm trading live, bro. But I'm literally backtesting. What? I'm not gonna lie, bro. This is my YouTube channel. Hold up. Count Chili, bro. This is my YouTube channel. This is my YouTube channel. Jake Trades It. This is my YouTube channel, bro. Don't walk in here and try and tell me what to do. Okay? It's my YouTube channel. I can do what I want. Alright? If you don't like that, you can leave. You don't have to watch. You can leave. Just go. Right? You can just leave. No one cares, dude. Okay. And are you even profitable, bro? Like, just saying, I've gotten $750,000 in funding, and I've gotten $3,600 in payouts of real dollars. So, kind of know what I'm doing, bro. Just saying, I kind of know a thing or two about these markets. You feel good after that, Chili? You feel good? Feel like you really got a little bit of dopamine from that, huh? You really feel like you got some dopamine. I don't know what the point of that was, but okay. Yeah, first strike. Thank you, Cave. Thank you. Okay, 11:01. First strike. 1 minute lining with the 15-second. Bro, it's and here's the thing. I'm gonna respond to the. I'm gonna say another thing. 11:01 first strike. 1 minute lining with the 15-second. Here's the thing, Chili. Right? Here's the thing. I could be doing this stream not live. There's no reason for me to have to do this stream live. I could just do this not live. I could just do this completely on my own. But I know making these streams help people. I know that someone's watching this and they learn something, right? If someone learns something, that's point for me to make it, right? If I was just doing it in bed and I wasn't streaming, no one would even care. No one would care. But because I'm streaming, you're going to tell me how to backtest, whether I should do it in bed or not. Bro, what? Bro, this is my YouTube channel. This is my YouTube channel. You can leave, bro. You can leave. You don't have to watch. Alright. Just taking a little break here. Man, I don't even know where I put the... Never mind. I don't know where it is. Man is the type to go give their money to a crook in a suit just because he looked professional and lose all his money, rather just I would rather just trust Jake than some crook in a suit selling you a dream. Bro, exactly. I mean, that could not be more real. It could not be more real. The market, like, people are, it's a bunch of scammers, dude. It's a bunch of scammers. Like 95% of people in the market are people pretending to be profitable that aren't. You want to know how you can find someone genuine? Someone who doesn't give a frick and is just backtesting in bed on a Friday night and giving out real sauce. That's how you know that someone's the real deal. Because they're just here. They're on a Friday night. They're backtesting. That's how you know they're different. Something's different. I'm looking for the... Oh my gosh, I'm looking for something. Yeah, the thing I'm looking for, I don't know where it went. It's in here. Okay, guys, I'm actually going to be taking a little break while I'm looking for my hairbrush because my hair is kind of wet. So just give me a second. I don't know where it went, dude. Oh, man. Oh, found it. Let's go. Yeah, you really think you can trust someone just because they're in a suit versus someone in bed with a hoodie? You really think that you can trust someone? That's how you get scammed, dude. That's how you get scammed. Exactly. They're selling courses. They're lying. They're scamming. Exactly. Isn't that beautiful? You know, the craziest part about trading is the true greatest traders of all time. You don't even know them. I was making a tweet about this a while ago. You don't even know the greatest traders of all time. They're so good at trading, they don't even need to care whether you know them. They don't need to have a YouTube channel. They don't need to give a frick. They're just out there enjoying life, hitting a 7R from their boat. They don't care. All right. I mean, the greatest inventors in the world, you know their names. You know Steve Jobs. You know Thomas Edison, Bill Gates. You know all them. The greatest traders in the world, they don't gotta have to show anyone. They don't have to tell anyone. They don't even have to make themselves known. right? They're just in the shadows, secretly running the market that everyone uses, providing the liquidity. All right. All right. Let's keep going. So, nice little, ended up being high resistant liquidity. I got wrecked on this, by the way. I got absolutely cooked. Like, crazy cooked, bro. Crazy cooked. What happened is I took this 3-minute inversion. We had a SMT at the low, and I was bullish, so it kind of made sense. And yeah, I got cooked. So let's figure out, okay, why did this fail? What's the logic behind why it failed? And what can we learn from it? So first of all, as I said previously, we had the first presented for value gap we reacted off of. We ended up getting SMT with this low into it, right? We get a beautiful 3-minute inversion. You can see why I liked this. And I went ahead and tried this. I tried this. Really nice momentum. How can I learn from this trade, guys? What do you guys think? Because I don't think this was really terrible. But on the other hand, it's fair to acknowledge the fact that we were actually still above most of this range still. So even though we'd swept out the low, delivering from the first presented for value gap, it's like, well, you could make the case maybe we had to go purge this range a little deeper, but honestly for SMT I think I'm just going to do dotted lines now because it allows me to make it a little faster. Okay, what's the logic for why this failed? And I mean, we had the true week open and the not true week, the true day open and 7:30 below. Oh. We had 7:30 below here. Which we ended up needing to come sweep again. So there's 7:30. There's midnight. So you can make the argument like, yo, we weren't above 7, we were still above midnight and 7:30, but I kind of thought like because we already manipulated them, we didn't need to do it again. Clearly we did. I guess let's just mark that out. Like one possible reason for why this failed is we were above midnight and 7:30 still. That's one reason. That's something to note. Here, let's actually put this in a note. But that's not, I don't know, that just doesn't seem like why this failed. That's like, I don't know, that's kind of just like a justification after the fact. I think the main thing is there's not really good Like, once again, I always like low resistant liquidity runs. There's not really a good low resistant liquidity run. Exactly, Simon, exactly. Like, it just doesn't matter, bro. And those are the same people who are not putting in the work themselves. And so it's like, okay, well, why aren't even you putting even in the work in the first place? I guarantee you that guy has not back tested as much as I've back tested. I guarantee. No way. You guys see how much I back test, so it's impossible. I mean, there's obviously people who back test more than me, but I don't know, not a lot. um, yeah, we're above 7:30. We're above midnight. I might sit up. I might sit up a little bit. I might actually do some of this back testing in a different room. Actually, I'm considering it. Okay, so let's really dig deep here. Why did this fail? Why did this fail? Hello, did you take any trades today? Yeah, you're looking at what I took. I took this inversion on the 3-minute. I'm trying to figure out what we can learn from it. It's a loss. You could also make the case it wasn't like not obvious low resistant liquidity, although I don't think that really totally matters. Once again, we dug deep into this imbalance here. We dug super deep, actually. Anyway, there's definitely things we can learn from this. Okay, well, maybe we should look at it from the opposing point of view. Like why the need to come all the way down here? Why the need to be so bearish? Obviously, we had midnight and 7:30 down there, which apparently wanted to get reswept for some reason. Like, apparently we had to come all the way back down there to take these again. Yeah, let's see. Let's maybe see, like, now we might have had a bearish SMT. No, no bearish SMT. What about this high? Man, I liked the trade. I don't know. I think one of the main reasons this failed is just because it's kind of hovering above this. I think that's the main reason. Yeah. When you look at it like this, from this standpoint, what? Okay, yeah. Here's why this failed, guys. All right, this is why this failed. This inversion is hovering above the point of max liquidity. This inversion is just chilling above the true drawn liquidity, which is this liquidity pool here, right? If there's no liquidity, if there's no transactions that occurred up here, why we need to go up there? We don't. So I think this is a very valuable lesson here. When you measure out this range, see where the transactions were, you can actually see, yeah, they were right there. They were underneath the low. We didn't take the low. So this is a big reason for why this failed, in my opinion. As you can see, just massive liquidity pool resting below this low. I think that makes a lot of sense actually, right? See how we have this like spike here, boom, we deliver down to it. It's kind of hot in here. Alright, guys, I'm gonna go to the other room. I don't want to backtest in here anymore. I'm sick of this room. I am sick of it. I am sick of it. And I'm really hot. So I'm gonna change out of that hoodie. And yeah, I'm gonna go to the other room here. Okay. See, now I'm not at a bed on a bed anymore. You happy now, Chili? You happy? You happy, Chili? Now we are in the zone. It's time to lock in. Give me just a little bit longer. Okay, here we go. Time to lock in. Actually, one last thing. All right, here we go. Time to continue backtesting. I don't have the light. It's okay. So yeah, this inversion, why did this fail? Because, well, we had a liquidity pool below. We ended up going down to it. You can see spike in transactions there. Just for fun, let's actually see if we measure this whole range out from top to bottom like this. So yeah, this is why I was thinking, okay, we could be drawn up here. You can see massive liquidity pool up there. But we kind of had to fill this area. And you can see this spike drawed us back in over and over again first. Bruh, why are you making that noise? What the heck? Okay. Well, what now here? What do we look at next? So we could always look at London. Let's keep looking at New York for a little bit longer. So yeah, New York was very interesting. How could we let's say what if we wanted to catch this reversal? How could we do that? Well, we did get a possible CRT to the downside. Yeah. I'm not gonna lie, that's pretty clean, right? You can see the CRT signature and price that occurred, right, where we get a candle close back within that range, mark out these two candles as one, and then all of a sudden you can kind of see, yeah, CRT, right? Very obvious CRT, and we go perfectly to that CRT low. It's like, yeah, that's pretty obvious, right? So that is a big reason for why this inversion actually failed, is because, well, it's against this 15-minute CRT actually delivering from this implied gap here. But check that out, right? Man, that's very insightful, right? You see that? And then delivery to the opposing end of that candle range. So this is another reason for why that inversion failed, right? We had a CRT on the 15-minute against that inversion. Right, you see what I'm saying? Sweep one side of the range, target the opposing end of the range. So then we had our Genesis entry right here. If you guys don't know what that is, right, where you basically take the close of that candle number 2, which in this case was candle 3, by the way, but that's besides the point. Take the candle close of that, and anything above this is going to be very sensitive. We can drop down to lower time frame, and well, you can see that. So we close at 10:30. Instantaneous Genesis entry right here. Then we deliver lower instantly to the opposing end. You see what I'm saying? So just to show it off a little better, right? These were 15-minute candles. So candle 1, candle 2. So candle 1 and 2 were accumulation. Do you see that? Or not necessarily accumulation, but just the original candle range. C2, right? So these are the accumulation candles. Then we manipulate, close back within the range. All right, this is exactly what we were expecting. Now we get on-site with distribution. Do you see why? See how perfect this was? Man, obviously you'd have to be very, very aware and precise and be able to take this very, very fast. But if you were, then you could take this and this would be perfect in its delivery. Perfect. There's probably people out there that literally just sit and wait for CRTs on the 15-minute to form and then take these entries. Crazy. So this is Genesis model. Oh, whoops. So this is a 1030 Genesis, and you can put your stop loss above this high. You can put it above that high. This is just an example of how you could do it very tight. So 1030. So it's a 15-minute CRT, and then the entry's on the 1 minute. Bang. And then delivery lower. Yo, what up, Javier? How's it going, bro? Just back testing, as always. We locked in. We're going to keep going. We are going to keep going. So that's a big reason for why that inversion failed, actually. Big reason. Right? It should not be taken lightly. I mean, that's real. That's a real thing. Like, with this CRT delivered price exactly to the CRT low, this was a real thing in price. This occurred. We can't just sit here and whine about it like, oh man, that inversion looks so good. No, just pay attention to what the market's teaching you. The market's showing you we had this CRT to the downside on the 15-minute. Should not have taken this long. It's a lesson. It's a lesson. It's not something you cry about and say, oh man, the market conditions are so bad. No, you don't just sit there and whine about the market conditions. You understand the market at a deeper level and then say, okay, how can we learn from it? That's what you do. This was actually probably a 2022 model. It's so subtle, but oh my gosh, this is crazy. Look. I don't really normally notice these kinds of things, but we probably swept out some old high. Man, you really have to be paying attention. The crazy thing about the 2022 is everyone's thinking you gotta have this breaker structure. You gotta have this breaker structure. The more I study 2022, the more I realize you don't need the breaker structure. You just need a liquidity sweep and displacement, right? And then all of a sudden, a whole new world opens up in your eyes, and you realize, oh wow, if we have a displacement candle after a liquidity sweep, this fair value gap is more likely to hold. And then a whole new world opens up for you, right? I don't even care that it wasn't breaker structure. Plus, if you think about it from a just like a concept or just a logical point of view, if it's a 1 minute breaker, if it's a 1 minute displacement candle, that means the 15 seconds is gonna have breaking structure anyway. So it's a lower time frame model anyway. You get what I'm saying? So you might not consider this 1 minute 2022 model. I do, because I know that the 15 second broke structure anyway. But you, once again, you don't need a breaker structure because, I mean, just look at it. It works, right? It's all about displacement and liquidity sweep. Okay. There's 2022 for value gap. So that's on the 1 minute. The 15 second, that's the one where this is clean on, and you can really actually get very, very specific into why the market ended up picking this exact high here, right? We ended up inducing this high, and if we measure out the move lower, well, you can clearly see that we rebalanced to premium of this. Let's just mark out equilibrium like this. I'm actually curious, what about this? Okay, let's just draw it like this. We rebalanced to premium here. So there's equilibrium. And you can see how we induce this high in premium above equilibrium. If you take this live, people are going to be mesmerized because, yeah, apparently these markets are random. Apparently. So someone said. But they're not. Right, we induced this high perfectly. Right, so we got a liquidity sweep. Break of structure. Once again, I don't care if it's actually a break of structure or not, as long as there's displacement. We are good. We are good. And then we get a fair value up that forms with displacement here. Clean, right? This is clean. We range, inducement, delivery. We can project out the little baby manipulation like here. 1, 2, 3, 4, 5, 6. Wait for it. I have no idea if this is gonna work. Wait for it. 7, 8. Oh, guys. Aren't these markets just beautiful? Aren't these markets just beautiful? Just absolutely beautiful. Eight standard deviations down, and then we perfectly tap that low. Random? I guess so. Oh my gosh. So let's go ahead and mark this out as a 2022 model on the 15 second. Once again, you could have taken this on the 1 minute. That's fine. But it's like one of those things where you can kind of just tell, like, something looks off balance. Like, it looks like it says, like, okay, inducement, we're about to fall. And I'm so curious now if we measure out this range. Where's the POC? Right? Where's the POC? Oh, who would have guessed? Who would have guessed, man? Who would have guessed? It's at the 8th standard deviation. Oh my gosh, bro. What? Yo, and now it all makes sense. Like why the inversion failed. Oh my gosh, if this is not more obvious. Oh my gosh, man. Yeah. Hello. Giant liquidity pool below this inversion. That's just crazy. And now it makes sense, right? Look at the market in this lens, you're like, yeah, actually, we had a big liquidity pool here that did not even get tapped. Didn't even get tapped when we got that. Everyone in the chat took a comment too deep. Yeah, nah, because I went off on you, bro. Because, bro, like you have to realize it's not that serious, bro. It's a backtesting stream. It's a chill backtesting stream on a Friday night, bro. It doesn't matter if I'm backtesting in bed. But yeah, you too. Have a good night, man. Appreciate you. Much love. Much love. I'm locked in either way, whether you think I am or whether you think I'm not. I'm still locked in. What confluences do you use to trade? I trade like every single one. I trade all of them. Nah, but for real, I trade I identify AMD and then basically you take an entry to get on side with that AMD, whether that be a 2022 fair value gap, an inversion fair value gap, change of state delivery, rejection block. Yeah, those are the main ones. But yeah. Let's go ahead and keep going. Clean down to that 8th standard deviation perfectly. What an amazing trade here. I'd go like that, and then I'd probably just target that low. I'd target the body. And once again, why? Why would I target that? What's the logic behind specifically this? It's the end of this range. It's the end of the giant wide range candle. Logically, that is just gonna be a good target. CRT, right? So equilibrium, we induce the high, and then delivery down to the low. Bang. And when you start to look at the markets like this, you're like, wait, we just gotta lock in more. It's a skill issue. It's been a skill issue. This whole time, it's been a skill issue. Skill issue, guys. Lock in. Lock in. And once again, I target that low because just very obvious this was just a giant range. So 1027 inducement. 1027 2022 model on the 15 second. And as well, it was on the 1 minute, but On the 1 minute, there was no break of structure. Once again, that doesn't matter if there is or not. Yeah, 1027, 2022 model, 15 second. And then we could do another version of this trade where theoretically you could have held it, right? Theoretically you could have held it down to the 8th standard deviation. And now look at this. Now look. Perfection. Now, does it make sense yet? Does it make sense why that trade I took failed? To me it does. To me it does. And I'm not going to sit here and cry and whine and say, why did my trade fail? And these markets suck, and the market conditions are so bad and everything's failing, and I'm going to go cry to ICT and ask him why his algorithm's not working anymore. No, guys, just lock in. Just acknowledge what happened and learn. Learn from it. The market's going to give you the opportunity to learn from it. You got to do it. Okay, 1027. Here, let's actually put a little note here. Whoops. I'm gonna turn that thing off, dude. I'm gonna turn that thing off. 1027 2022 model, 15 second. Number 2. Okay, I'm turning this off. I'll read that in a second. Yeah, bro, you have to realize, Chili, the realest people that are going to be actually telling the truth about the market are the people like me who are literally just in bed, chilling, in a chill live stream on a Friday night with probably hardly anyone watching. Versus the people that are all professional in suits. Those guys are lying to you, bro. Those guys are lying to you. It's all trying to sell you something. And so just understand that, like, the realest people are just gonna sit here face to face, not really care what anyone looks like or whether they're backtesting in bed or, it's just they're the people that actually they're gonna be real with you, unlike someone else. Okay, let's keep going. Let me read this. So, Unicorn Model, what's your Discord? I'm gonna send you something. You guys can just add me on Discord. It's just, you can just go in the Discord, friend me. You should be good. Well, I guess that's my part as well. It wasn't meant to be a harsh comment. Extreme trader. What confluence is used? I don't trade NQ. March, April, was I switched over to diff. I made 50K plus, but the Trump post lost back because of Trump social. Man, simple, mainly TA, but yeah, comment was not meant to be harsh. I'm just a blunt person. I say what I think before I think over it too much. Sorry if it was a bit harsh. I've been mentored by a very strict, disciplined person. I get why. Yeah, well, and there's a difference between backtesting and trading, and that's the thing. Like, Like when I'm trading, I try and make sure I'm on the charts. I try and make sure I'm not in bed, because I actually think that's a time when I should be actually pretty alert and aware. And obviously, I'm not perfect, but I do get what you're saying, bro. I do. Yeah, absolutely, bro. I totally get it. I totally get it here. I totally get what you're saying. But also, like, I'm just trying to be extremely real. There's, you know, I could just not stream it, but I'd rather stream it. And I don't really care what anyone thinks. I don't care if I'm backtesting in bed. I don't care if I'm backtesting underwater with upside down. I don't care. What I care about is live streaming it so people can watch. And if people can learn something, then that's what matters to me. I don't care what I look like or anything like that. Yeah. Yeah, I mean, it's like 95, 90 plus, 95% plus just course sellers. And so, yeah, the realest people, they're not going to be screaming out in suits and you know, trying to impress anyone. They're just going to be in the background, just sitting there quietly learning. And ideally, that becomes me, right? Anyway, Vilmos, what's up, bro? Good to see you. Good to see you. I might take a little break and then I'll come back. Um, TGR made money selling his fans. Yeah, man. Hardly anyone's legit. But that doesn't mean that these markets aren't algorithmic. Because let me tell you, they're freaking algorithmic, bro. I'll be back. I'm gonna take a little break. All right. About to get back to it here. And we'll keep going. We'll just keep backtesting. We'll see what else we can learn from today. I might ask my friend if he wants to come stop by. Maybe chill here with me. But Javier, where's Jake? I'm here now. I was just on a little break. Hang on. Okay, guys, let's keep going. Let's see. I'd rather trust the suits, not gonna lie, than the Miami loudmouth with rented cards. That's fair, bro. That's fair. But just understand, most people you can't trust. Whether they're a suit or whether they're just a random dude, you just kind of have to find the real ones, and they're not gonna be everywhere. So, yeah, where's Jake? I'm here. I'm right here. Some of the well-known influencers don't have history, so they go to Cario approval because that's the only place it takes in influencers. Most YouTube influencers, that's in YouTube. Yeah, man. It's a very, very sad and shitty place because, let's be real, being a profitable trader, unheard of. Unheard of. Because the reality is, all the truth is gatekept. And it has been gatekept for so long. And only until recently, I was just talking to my mom about this. It's only been in like the last 6 years, 3 years even, that most of the information on smart money concepts has been on the internet. Like micro contracts. This is crazy, guys. Micro NQ contracts or micro ES contracts. Micro, I don't know what they're technically called, but the micro version. It has only been 6 years since they made that. That came out in 2019. You're telling me the thing that we trade every day wasn't even a thing 6 years ago. You had to trade minis. You couldn't even trade micros 6 years ago. And then the 2022 mentorship, that wasn't a thing even 3 years ago. Dodgy's mentorship, TGR's mentorship, that's in the last 1 to 2 years. We are in prime time to be a trader. Never has there been more information that's came out about the truth about trading. And it's a crazy time. It's a crazy time to be alive. Appreciate you, Javier. I'll see you later. All right, see you guys. Sounds like you guys are good to go. So, peace out. See you guys later. I'm going to keep going, and we'll keep backtesting. Whew. Let's keep going. What are we looking at now? That looks like a kind of nice inversion. I'm not even going to lie. I have no idea if this was a higher time frame one or not. But it's just popping off the chart, actually. Oh, that's clean, bro. We got to talk about this. All right, we got to talk about this. So, remember, so we can actually use the CRT low getting taken as a confluence to long here. This is actually really fascinating, actually. Look at this, right? Low to high, we have this obvious candle range. Anytime you just see a giant range, and then it close back within the range, like candle 1, candle 2, they ranged up. Candle 3 closed back within the initial range of candle 1 and 2. So this is going to be the draw, the low of candle 1, like that. What's crazy is we can use this as a confluence to say, okay, now we swept out the low of this. Now, let's see if we get a trade out of that, right? Because this is going to be a stronger draw on liquidity. So we can go CRT low. And you can see how that got swept. And then I like the 30-second change in state. And I'm curious. Oh, that's a 15-second. Or is that 30-second? Yeah. Whew, that 30-second looks fire. And I'm wondering almost like maybe could it be possible there was a 5-minute PD array and was there SMT? Oh my gosh. So what happened here, guys? Do you guys see this? Oh my gosh. No way. This was Phoenix model at the low. Oh my gosh, bro. These markets are just beautiful. And then also we were below what time? We were below 7:30. We were below midnight. What? How could that be random? How? It's impossible. It's impossible. Lock in, guys. This is going to change your life, and we are in the prime time The golden age of trading. Never has all the information ever existed on the internet until the last 2 years, bro. What are the odds you're born right now with all this information completely for free on how to be a trader? Lock in. It's all free. You can literally become. You can create generational wealth if you just lock in. Like, I mean, obviously, it's not easy, bro. But it's just crazy how precise these markets are. Wow. So you can see we took midnight, we took 7:30. We ended up getting SMT with this low. What do you know? It was 90-minute SMT, right? 90-minute SMT, higher probability. Why was it 90-minute SMT? Because, well, the low between 9 and 10:30 is right here. The low between 10:30 and 12 is right here. So you can see there's SMT between two 90-minute quarters. I don't need the quarterly theory indicator to look at that. I can literally just look at the chart, and you can see that clearly that was 90-minute SMT. And why was I getting excited, guys? Well, we had a really nice 5-minute. Where was it? Probably a 5-minute. Whew. This just what a crazy interesting opportunity this is. Oh my gosh. 90-minute SMT, but the CRT low. That's so interesting. So I'm not going to get into it's hard to explain what's going on through my head, but the point is we had a rejection block. 5-minute rejection block. We have SMT with this rejection block right here. So what does that mean? When you see a SMT with the rejection block, especially when it's a sequential SMT, right? Sequential meaning time-based SMT. We got a time-based SMT with this 5-minute rejection block. Okay. So what is this? Phoenix model, right? This is Phoenix model. We can actually go down to the 1 minute. We'll probably get even a cleaner trade. Right, 1 minute rejection block. 1 minute rejection block. You guys see the Phoenix model, right? Phoenix model is entry at the rejection block, stop below the rejection block, and well, you can see clearly this was a nice little 7R off of that low. So first, let's go ahead and observe that, right? So we'll mark this out first as Phoenix model. So 1 minute rejection block. Let's say you enter right at that rejection block. Bang. Up to those low resistance highs. And well, that's, I don't even know. That's really nice though. Now, obviously, I wish I could see this all the time in live, but it's there, right? It's there. Just gotta look. So 90-minute SMT, 90-minute SMT here, so you can see it now, right? You can see the Phoenix model happening at that low. So yeah, this is how I would take this. Honestly, you can project out the rejection block, and you can see that 8th standard. There's no way, bro. The 8th standard deviation of the rejection block is perfectly at those highs. What? What the heck, bro? Nah. That's crazy. Actually, let's mark it out like this. Oh. Dude, you can't make this up, man. Okay, so let's say we had stop there, because obviously when you have stop where it's supposed to go. What? Precision? Question mark. Okay. What the heck, bro? Why are these markets so precise? It's absurd. So yeah, perfectly 8 projections up from the rejection block with 90-minute SMT taking out the CRT low. We get this. What? The precision is crazy, dude. Oh my gosh. So yeah, that was cool. So let's screenshot this. This is Phoenix model, where basically we got the 90-minute SMT into the rejection block. It's hard because you kind of have to see it as it's forming, but still. 11:37, Phoenix model on the 1 minute. And then as well, since we got Phoenix here, what does that mean? This is dark Phoenix, meaning we sweep the rejection block on the other asset. Oh my gosh. So perfect. I'm surprised now. I never known this. I knew something was off about them. So many people are the method. They finessing everyone in that bullish S&P. I took the long there, just didn't know where to take profits, so it just that's perfectly fine, man. Sometimes you just gotta go for 2R and just say, yo, we made money. We made money. We got a 2R, right? Sometimes you just gotta do that, and that's okay. That's perfectly fine. That's actually good, bro. Yeah, nothing wrong with that. Crazy, bro. So yeah, Dark Phoenix here. So meaning, basically, I can tell. Okay, we're getting Phoenix model on the Nasdaq. What does that mean? Well, opposing asset S&P. This is gonna be a soup of the rejection block. So this is the regular Phoenix. This is Dark Phoenix, where we soup the rejection block. And we had a time-based SMT too. So 11:37. Dark Phoenix. What is this? 1 minute. And then I'll put in brackets SMP. Or I'll put ES, because technically it's not called the SMP, it's called ES. Okay, wow. And then the point of all this, is to show, okay, so let's say you didn't want to take the Phoenix, which reasonable, right? That's a very scary trade. Well, you can use that as a confluence for your long off the 30-second change in state. Instead of taking that as a soup of the Phoenix model, you just wait for the confirmation on the aligned time frame, which would be the 30-second. And whoa, what a beautiful close on that 30-second there. Just genuinely beautiful. And from there, we expand on the 30-second. And we never come back. Not one single second. We don't come back for a single second. Then we deliver up to that LRLR there. Pretty clean. Not a single second of drawdown. Bang! That's 3.6R, 3.2R, something like that. We can actually project out the manipulation here as well. We do hit that fourth standard deviation. I'll just target this. Bro, the lights just flickered. Is it Halloween yet or what? Bro, what? I don't know if that's kind of cringy. But nah, what? The lights just flickered. What the heck? Okay. Bang. 3 standard deviations up. Perfectly hit. Crazy stuff, guys. We also perfectly swept 7:30, and we also perfectly swept midnight. Clean as heck. And obviously you could do it for the fourth standard deviation. I would just conceptualize the liquidity, right? That's going to be the good draw on liquidity, so. So this is the reason this is a nice confluence for not needing to take this low is, well, this was the low of the CRT. So this would be flow state close, and I am switching the name from flow state Phoenix to just the regular flow state close because I don't know. I just don't want to make too many models, honestly. Because this is just a flow state close. It's just using a rejection block. So 11:38 flow state close, 5 minute 30 second. I guess 11:39 technically. Or was it? Yeah. Five-minute rejection block, 30-second change in state. Bang to that low resistance liquidity. Bang. Take profit hit. Crazy. What model did you use for that entry? For which one? For this one? For the change in state off of the rejection block or souping at the rejection block? The soup at the rejection block with SMT, I made a video on that. It's called Powell Trades Model, and it's like my fourth recent video or something like that, maybe my third or fifth. Go watch it. But it's basically you look for a rejection block, and then you look for SMT forming at that rejection block, and then you enter at the rejection block, and these will be really high RR. They might not work out all the time, but whenever you have SMT, especially when it's time based, into that rejection block, especially when it makes sense in terms of AMD, especially when it's below true opens, this is gonna be super nice. So I call that Phoenix model, or I mean, that's what I learned it as, but it's the same model that Powell Trades takes, just a rejection block with SMT. And then the other one that I marked out is just using a higher time frame PD array, which is a 5-minute rejection block, and waiting for a aligned time frame change in state out of it. So 30-second change in state, and this is flow state, right? You take a change in state delivery off a higher time frame PD array. So 5-minute rejection block, we had SMT, 30-second change in state, delivery. Oh my gosh, bro. Everyone's asking me the same question. Why the need for so many models? Because it's all the same. All models are the same. All models are AMD. It's just when do you enter within the AMD. Honestly, it's getting kind of annoying to try and explain this to everyone. These markets are not mechanical. They're never going to be mechanical. They're conceptual. Conceptualize that all models are part of the same model, which is AMD, right? First the rejection block, you'll get the answer at the rejection block, then you'll get an inversion, then you get a change of state, then you get a 2022 for value gap, then you continue higher. I mean, guys, I don't know. I'm just getting kind of annoyed of everyone asking me why I have so many models. It's because it's all just AMD, and it's just a matter of when within that AMD do you enter. I'm honestly getting kind of annoyed at people asking me. see if anyone said anything. Why trade the 2 or 3 minute? Like, instead of what? The 5 minute, the 15 minute, the hourly? Like, I don't understand what you're asking, but I think what you're saying is like, why trade the lower time frame? And the reason is just because these markets, the more you study them, the more you realize that they, especially in the futures market, not necessarily the stocks, but in futures, these markets a lot of time will be precise to almost the tick. And because of that, you're able to take lower time frame trades with insane precision. A lot of people will disagree with that, but according to my own backtesting, these markets are stupidly precise. Stupidly precise. So I trade the lower time frames with with a high degree of conviction because I know how precise these markets are. As long as you have time and price aligned, the low time frame will still deliver the market to the draw on liquidity. And that's just that. All right, man. That was kind of cool, guys. We went on quite a tangent there. Oh my gosh, and then it happened again at the high, bro. Oh, you can't make it up, man. The market's just so beautifully precise. Just a beautiful little machine, isn't it? So, once again, we have 10:15. I'm honestly just going to start memorizing these. This is going to be a 6-hour SMT. And then, yeah, we ended up using the rejection block here, like that. This one swept it, this one didn't. You guys see it, right? Obviously, it's not always easy to see right away, but we were above 7:30, we were above midnight, and then, well, the true open for the 90-minute cycle, which would have been 12:22. Whew. Wow. No way. Yeah, that's freaking insane, bro. Well, look at this. 12:22. No way, dude. 12:22. So this is 90-minute true open for the 12 o'clock cycle. And then you can break this down into 22-minute cycles, right? So 22 to 12:45. Well, the true open of that is 12:28. What do you guys see? Where does the soup happen? Where does the soup happen? Above 12:28. Almost makes me wonder, like, why didn't we get SMT here? Maybe we did on YM. Either way, though, true opens, using them as premium and discount, incredibly valuable. Yeah. The only thing is we do come back up, but I don't know. There's definitely reasons to say this might not have been the most obvious in the world, right? Because This move definitely could have stopped you out. I'm not even gonna sugarcoat it, right? I think that, it just kind of depends. But oh, I gotta charge my laptop. Anyway, I'm gonna show. I'm not gonna necessarily even frame a trade here. I'm just gonna show like, look, right? We had a Phoenix model at the high. I'm gonna plug my laptop in. I'm gonna go get the charger, and I will be right back. Let me get some clout. What up, Kelechi? You got some clout now. It's all yours, bro. You can have as much clout as you want. I'll give you as many shoutouts as you want. Clutchy. You just got 8 shoutouts, bro. 8. I just see many traders use the 30-second, 1 minute, 5 minute for low time frame trades, not the 2 minute or 3 minute. Yeah, all of them are good, bro. There's no hate to any time frame in my book, right? All of them are valid. Okay, as long as you line time and price. Right back. All right, let's keep going. Plugging this in. Let's go find the outlet. Bro, I want my friend to just come chill with me and maybe just vibe with me in here because it's kind of lonely in here, but I don't know. It's whatever. Let's go. 1591 subs. Guys, thank you. That's crazy. Approaching 1600. It's insane. That is so insane. 1600 subs is just, oh my gosh. That's crazy. It's coming up. Okay, so yeah, like I said, SMT at the high here. So Phoenix and Dark Phoenix, right? One asset. I'm not even gonna mark out the trade. You can just kind of just see it, right? One asset takes the high into the rejection block. One asset pushes into the rejection block. So and then yeah, clean. So yeah, just go ahead and save this as another Phoenix and Dark Phoenix in the afternoon. Wow, so many cloud tokens, thank you. Did you take any trades today, mate? Yeah, I showed you. I took a 3 minute inversion to the upside. Missed that there was a giant liquidity pool below. I got wrecked. Took only one trade. It is what it is. But yeah, I took a loss today. That's okay. I liked it in the moment, but I did not realize we had such a big, high degree of transactions below the inversion. There's a 3-minute inversion to the upside. You know what? We live, we move on, we learn, right? But yeah, what happened was you can see the 3-minute inversion was right here. I'm not gonna go to the 3-minute, but you measure out the range, find the degree of most transactions. You can see, oh yeah, we hadn't taken this out yet, so you can see, bang, we deliver back to it. It's a very useful tool, by the way. So okay, I don't know what else. What else should we look at? There's always more to look at, is the thing. Like, there's always more. Like, I could. Like, it's really never ending how much you can look at. It's also educational, though. What do you guys think? Any suggestions what we should look at, guys? I mean, I could look at the higher time frame. It's why it's important to go top down and really understand what does the higher time frame want. I honestly, I had a pretty good idea for what the higher time frame wanted today. I knew we had the 4-hour gap. I knew a 4-hour gap meaning this old one over here that got used 5 times. 1, 2, 3, 4, 5. But it's like, this is where the market gets tricky when it starts doing this stuff. 1, 2. You know what I'm saying? Like, it just does not like being simple. And that's, we gotta learn from it, and we gotta keep moving on. We definitely end up using this as a 15-minute change in state. I'm using the wick. Interesting. I don't even know what else to look at, guys. Maybe I'm just getting tired or something, but that's probably it. Oh, whoops, my bad. Then I think it's better for you to stick to your style. No need to copy what time frames other people use. Change your trading scene. We can't see trading view. Yeah. My bad. I don't know, guys. I'm getting kind of tired. But I'm not. I don't want to stop the stream just because I'm tired. There's always so much more to review. It's crazy. But yeah, that Phoenix model at the lows was just beautiful. Honestly, let's see if we have more first presented for value gaps. Oh, wait, actually, let's look at new day opening gaps. It's always interesting to see if the market interacted with them throughout the day. So this is one reason why I really like this 3-minute inversion, is we were also delivering from a new day opening gap. But oh, you know what? This to the downside. Now I'm curious if this was first strike. It might not be a super high R version, but for the sake of learning, I kind of want to see if it was. So remove this. So once again, this was the first presented for value gap. It was the gap between 933 and 935. That was the first presented one. We got our first strike out of it right here. See how the bodies respect that for value gap. We go higher. And then basically the way we honestly interact with this throughout the day is, well, you want to look for low time frame change in states off of it based off the drawn liquidity. So if the drawn liquidity is lower, like this low, then we're going to inverse it, back test it, and then get low time frame change in state out of it. Makes sense? So we go down here. pull up the first center for value gap. And this is kind of what I wanted to get at, is like, did we get a trade here? I don't know. I'm just curious. I'm a curious learner of the market, and I just let the markets show me. So there's two different ways the market changes state here. Honestly, whichever one you want to do is probably fine, but we have, first of all, we have this one, and you'd have to enter on the wick, and you can see that you'd have no drawdown at all, actually, which is crazy. Honestly, I don't even know if we even, that's crazy. No drawdown at all. That's insane, bro. So you might not even have gotten filled there. Okay, let's just show that as the first one, right? So this is option 1, entry on the wick of the 15-second change in state. Probably not the one I would have done. I'd probably wait for that one. I'm just being realistic. But anyway, let's say you entered on the wick of this. I would project out, honestly, I'd project out that order block. This is where things get fun. Oh my gosh, wait. Yeah, if you project out the order, I should have projected out this. 1, 2, 3, 4, 5, 6, 7, 8. Bang. Precision. You see the precision in these markets, guys? Whew. You guys been red-pilled yet? You been red-pilled? Welcome to the Matrix. How crazy is that? So that's one way you could take this off of the 15-second change in state with a liquidity sweep down to that 8th extension. For first strike, honestly, 8 projections is usually pretty good. As always, I just kind of scale out. It'd really only be like 5R, but yeah. As always, it looks better on paper. Realistically, you're not gonna catch it the whole move or whatever. Okay. Screenshotting. So this is version 1. This probably would not be the version that I would take. So 11:19. First strike. 1 minute. What is it? 15-second. Okay, and then, well, what's the next version? Well, you could take the lower change in state, which is right here. And then I guess stop loss would go probably same spot. And then we can project this out. This one, you're going to have a tough time going for 8 standard deviations. I'll just say that. Honestly, you have a tough time going for 4 standard deviations. And that's why I like to scale out, because I never know. Okay, so if you measure this out correctly, like you're supposed to, from the green body to the green body, like this. Obviously, this is easier said than done. I'm not saying this is easy. But then theoretically, you do hit that 4th standard deviation. So that's kind of nice. So a lot of time when you mess up the take profit or something like that, it's usually because you just messed up the the projection. It's usually what happens. Okay, so I go like this, 15-second change in state. First one, I provide gap, and then basically what I would do is I'd go. Obviously, this is not easy, but what I'm saying is theoretically, look at the possibility here, right? Inducement. "15-second change in state," and then inducing this high. And obviously you could enter at this one too. Let's just say that you did that. And obviously I like to scale out, as you guys know. Let's just get rid of this. So even in an area of price where you wouldn't even think there'd be a trade, you can see there was still a trade. That's the more realistic version. 11:20. First strike. 1 minute. 15-second. Bang. Alright. Might take another break. Would you have went break even there? Good chance, yeah. Depends on how you manage the trade. So for first strike, one way I like to manage the trades is I like to just scale out at every standard deviation. So like some off at the first, some off at the second. Honestly, I'll actually kind of just, nah, I wouldn't say that. Honestly, I just like to target what makes sense. Like, what do I think it's actually going to go to? Like, is it going to go, like in this case, I would probably say this is more likely to go to the fourth because it's got a wider um, manipulation leg, right? So I wouldn't expect it to go to the eighth because it's just a wider one versus this one. This is one that'd probably go to the eighth, this tiny one. So you might go break even here. I think the correct thing to do in this situation is just kind of, honestly, maybe just hold. Maybe just hold for the fourth. Then again, that's kind of scary. I don't know. But it is just an observational trade. We're just learning. So, yeah. Yeah, probably just, you could also, if you just want to just not have to get the headache, as always, you could just target, let's say you just targeted the second standard deviation. This is perfectly fine. There's nothing really wrong with this at all, actually. Second standard deviation, you hit it. Great work. You can be done there. You can just take profit there. This is perfectly fine. And honestly, might even be what I would have done. I'm not even gonna lie, because I just like to make sure I make money nowadays. So yeah, that's more realistic way to take it. So let's save this again. 11:20.
Oh, actually? Wow. Okay, yeah.
Oh, hey guys.
Oh, hey Jake,
Hey, you
what's
want to
up?
watch Stranger Things with us?
You should.
I can if you want.
Yeah,
Yeah,
actually,
you should
Jake's
watch
watched
with
this.
us.
I don't want to bother you guys though.
No,
I
Jake,
might go in the
don't
other
bother.
room if you don't.
No,
No,
you're
stay,
fine,
Jake,
huh?
stay. What are you working on?
I'm just backtesting.
Oh, nice.
Wait, be back.
Oh, why be back? Have you ever seen Stranger Things before, Jake?
Yeah.
Yeah? A
I
little
don't
bit?
think I've seen the newer season yet, but
Okay. Let me see what this back testing is, though. I'm curious. You're always talking about it.
so this is what I was telling you about earlier today, actually.
Okay.
So you take the old first presented for value gap. It's this first presented. It's the first presented gap on the 1 minute chart. That forms after the market open, which is 9:30. So you can see this is the first presented gap right here.
Okay.
Drag this over, and there's going to be like a ton of opportunities with this throughout the day. So you can see how the bodies respect that.
I think so. Is that the little line?
The little line here.
How it matches that one? Okay.
So we can go down a lower time frame. We can find a change in state out of this right here. Change in state. We see how we rebalance into this box.
Yeah.
We get change in state out of it. So this.
So you're just kind of following like old patterns and seeing if it mimics another.
No. So you see how we got change in state. We retest it and then bang. And actually, wait. It's more obvious on the 5 second here.
Okay.
So we fill the first presented for value gap, change in state, retest, and now that's 8R, right?
Okay.
That's 8 risk to reward on your money. So if you risked
like let's say
$100, you make $800 in 5 minutes.
Wow.
You see why I like it?
Yeah, I see why you like it a lot.
The possibility, bro. The possibility, yeah.
Wow.
And then look at how often it happens, right? You see this?
Yeah.
Again. So
I see, yeah.
So we back test it. Now obviously you could probably go like that. Once again, 5R, $500. And
could you also get profit from all these ones too?
Mm-hmm.
So if you like bought, sold all the way. Yeah. Or is it smarter not to?
No, I just take the trade as is. But look, 11 a.m., 11:03 a.m. In 3 minutes, you just made $500.
Wow. And this is a market recap. Not like is this from the market?
This was from today.
Today. And so back testing is looking back at the market, and
so this is another one where I just recorded it. So sweep, change in state. You see we get this closure below here on the 15 second, and so we retest it, and then from here down to the second standard deviation, that's 2R, $200 in a minute and a half.
Wow.
So you
but you could also lose $200 in a minute.
No,
and a
you half,
can
only lose what you risk. So you can only lose 100. That's the beauty of RR. You only lose what you risk.
What was this thing?
Wait, I gotta screenshot this first.
Okay, no worries.
So what I do is I screenshot it. So I take the trade. I already saved it. So I put the timestamp of it, 11:20. 11-20. I name it what the name of the trade is.
Mm-hmm.
And then I put the time frame, and then you can see that I actually have a folder for every single day of every single month.
Holy cow.
And I have every single
And then
year.
Could you ever go back to these and look at them again?
Yeah, look. So like I have all. See, that's
my
March.
Gosh.
This is May. This is July. This is August, and every single day I just got a ton of trades I recorded.
Dang, when you said you took this seriously, I didn't realize how serious this is crazy. That's a lot of work.
Yeah, I've been doing this.
You spent hundreds and hundreds of hours just looking at
this. Thousands. At least, bro.
Wow.
Look at this trade. This is one of my best trades ever. I took this live.
Okay, explain it to me.
I sold here at this very top. I
Uh-huh.
bought back here, bought back here, bought back here.
Oh, it's gonna be profit on all those.
Yeah, so imagine you had a stop loss right there, which was $100.
Okay.
This would probably be $600, $800, $1,000. Only risking 100.
Whoa. That's insane. And I see how it's difficult. You have to like look at all those little different spokes, right?
Kind of.
Kind of.
Let's see what people are saying. No one's saying anything.
Wait, is this live right now?
Yeah.
Oh wow. That's hilarious.
I might just end the stream.
I did not know I was on the stream. That's actually crazy.
What?
That's awesome.
That you're.
Yeah, I'm on my favorite YouTuber stream.
Yeah.
Stream. I got a what's it called? Live.
Jake trades it. Actually, I'll probably just go back to him. But the thing is, I backtest all the time, so it's just normal. Like, it's not weird.
Yeah. Has people ever sent you money on your lives yet, or no?
I still have to unlock that. I'm like 200 watch hours ish away.
Oh wow. So you gonna come watch after?
Yeah, maybe.
Yeah, come.
Wait, why didn't you take those trades you identified today? I just didn't see them, bro. It's one thing to backtest them. It's another thing to catch them live, because not only do you have to see it, but you have to execute it at that exact moment. Trust me, bro, it's easier said than done. Doesn't mean it's impossible, but it's really hard. Okay. Kind of just take another break real quick. Honestly, guys, I might play some chess. If let me know if anyone wants to play me in chess. Alright. Well, I guess I'm gonna keep going. Actually, I might play chess. If anyone wants to play chess, let me know. But I might just play chess right now. And I really don't care what people think of me. I'm just kind of just vibing right now. Don't really have a ton of friends, so I don't really care. But yeah. Or I might just end the stream. You know what? Should I end the stream? What do you guys think? Yeah, I should probably just end the stream. There's 5 watching. That's a lot. Guys, do I end the stream? Or do I keep backtesting? Or do you guys want to play me in chess? Or do something else? Let me know. Audio's chopped up. Really? That's weird. Play chess? You guys think I should play some chess? Alright, we're gonna play some chess. Just kind of chill vibes right now because, man, I don't know. You backtest for like 3 hours, you get kind of tired, you just want to do something else. So, yeah. Audio's fixed? Okay, good. Yeah, markets will be back Monday. Agreed. Saturday, or I thought that was Saturday. Nah, Friday. Friday nights for chilling and just enjoying yourself. So, yeah, I'm gonna play some chess. I really don't care. You could be like, this is a trading YouTube channel. Why are you playing chess? Bro, it's my YouTube channel. I can play chess. So, yeah, I'm gonna play some chess. If you guys want to play me, just let me know. But yeah, I'm just gonna be playing some games here. Do I play Blitz or Rapid? I guess let's do a Blitz game. Do 5-2. I gotta get my Blitz rating up. It's so much worse than it used to be. It's not bad. It's just worse than it used to be. But it's good. It's just I gotta get it up. See, now this is not comfortable. Okay. All right. Here we go. Let's see. All right. Who we playing? Moneyball. All right. Let's do this. So bringing the pawn out to the center of the board, controlling the center. We control these squares. I'm going to bring my knight out next. Looking to capitalize here. And they're about to board. Okay. So here, Scandinavian, he's going to take back like this. I'm going to bring the knight out when he brings the queen over, and then he's going to lose a tempo, right? He's going to have to move. So from there, he might move here, he might move back. Either way, pretty solid move is to just bring the pawn out to the center of the board. Let's see. I think I messed up the speed on the mouse or something. Yeah, I think I fixed it. Okay, so that's a weird move. So he just aligned his queen up with the king, meaning later on I could get some pinning opportunities. I could win a tempo on him. He's going to have to go like this, and then I can bring the bishop back, and basically I get a developed piece. So he's going to have to do that. Then I can bring it like this. And he's probably going to need to go like that. If he doesn't, he might be in for some trouble later on because, okay, let's see. It's interesting. I think you could play pretty aggressive here. Go with the queen like this. That's a little aggressive, but you can maybe do it. It might be smarter just to bring the pawn out like this. Don't want to get the bishop trapped. I say like that is probably best. Just controlling more squares in the center. He could bring the bishop out like this. Okay, wait. So he's kind of overextending that pawn, though, is the thing. So he does play that move. We can kind of defend that pretty easily by bringing this knight like this. And then we're preparing to castle. And we can also kick him out like this. So that's what we're going to do next. He's probably going to take. And then we can castle. Right. We can actually pin the knight. Oh, I just messed up. He didn't see it though. Oh my gosh, I'm so lucky. So I can take like that. Bro, I could have messed up so badly. Oh my gosh. That could have been bad. Well, he didn't see it. What the thing I messed up was um basically he could just take this pawn. And then I'm screwed, bro. Well, I mean, I would have damaged his defense, but still not something ideal. And then I can bring this over, and this is still defended by both the rook and the queen. Okay, strange idea. What's the idea there? He might be preparing that. I think we should just move the queen here. Oh, wait. Drop in like this. Threaten it. Oh, but then he could go. Wait, nah, that's not that good. Okay, we're gonna bring the knight in the center. If he takes, we can take back with the rook. I wonder if anyone's even watching this. Is there actually 4 watching? That's funny. You guys are watching me play chess. Let's go. Okay, You guys want to play me in chess? Like, you guys want me to play random people? Ew, random people. No. No thanks. Once again, we're under the threat of him moving this pawn, which is not very fun. Ooh, this is a power move. Because we're threatening check, we're also threatening taking that pawn. Oh, that's a crazy, brutal move. And so now we can check like this. And basically, he's going to have to move either of those spots. He just lost the queen. Because now he has nowhere to go. That's crazy. What? What a crazy win. Bro, that was just dirty. Oh my gosh. Apparently I played pretty bad. Oh my gosh. Yeah, that's just crazy. He just loses the queen right there and then. Oh my gosh. Okay, did I gain points or what? Man, I better have gained points. I gained 30 points. I guess that's pretty good. Yo, Manish. Manish is playing. It's been a while since I've played some Blitz. Let's actually look at this. Alright, let's play another one. Let's see if we can win. Let me know if you guys want to play. Bro, what? Load! Load. Okay, I might just be done. I might be done for the day, bro. Oh my gosh. Oh, just keep grinding. That's you watching. Alright, guys, I think I might just end the stream. This is so pointless. Alright, guys, I'm gonna end the stream. Thank you guys for all hanging out with me. Appreciate it. It's been real. It's been fun. We hopefully learned some stuff and maybe you got just a little better. 1% better. Maybe. Maybe. Even if it's 0.5%, right? Just 0.5% better every single day. It compounds. it compounds like crazy. So hopefully you guys enjoyed this live stream. I will see you guys in the next one.